All right, let's go ahead and begin. Welcome, Checkmate Crew. Today is Tuesday, September 6th, 2022. It is just afternoon here in New York. Thanks for joining me. Before we start, guys, if you go through our description link, after this live stream is over, I'm going to update the notes on the description links, and I'll have all of our links on there, our Discord link, our Twitch link, everything, all of our different sites. Guys, our Discord is free. There are no paywalls. I get a lot of those questions still. How much does it cost to join our Discord? It doesn't cost anything at all. So come join us. We have discussions like this around the clock. Anyway, guys, first things first, I wanted to update you guys on the positions that I have. I got rid of all my risk-off positions. So just for your peace of mind, UVXY, gone. FEZ, gone. See, there's no more tags. Those red tags are gone on the sides. Red and green tags. FEZ, gone. What else did I have? EWT, gone. So that one I don't have either, as well as what else did I have? FEZ, no more. I don't have that anymore. Okay. EWT, oops. EWT, no more. All right. I don't have it anymore. I did, however, lotto long the June that's 2024 the calls at 270 strike. I was able to put in a small stink bid of 220, and it got filled. And the way I do that is you can actually, for some reason, I don't think Thinkorswim has this on their desktop platform, but if you go to actually like the TD Ameritrade website, there's actually an implied calculator for implied volatility, and I just put in some lower implied volatilities. I think right now the implied volatility was like around 23-24%. I just put it down to some of the other closer dated option chains. They're closer to like 20-21%. So that is where I got the bids from, and I just put in that bid, and hey, it filled. So sometimes we get lucky. It's already up 50% after the algorithms found out of the mispriced of the difference in price of what it really should be based on the implied volatility of that options chain. So even though nothing really happened, I'm still up about 50%. So there we go. So I guess I got lucky in that. As far as today's episode is concerned, I'm just going to keep this really short today because the plan really hasn't changed. Really what we're looking for is our liquidity data, okay? I can't stress this enough, guys. We don't act until we see clarity. Now, I know some of you out there, you guys are day traders, so, you guys may be willing to be a little bit more active, but, that's not for me. So I don't like to stay active or anything like that. So for me, I'm going to wait for our signals. That lotto that I did on IWN is a very small lotto, okay? It's just to settle my FOMO, just in case if HYG does turn up. Now, here's the thing, just a caveat to everything that we've talked about pretty much in the past couple of months. It's all great, okay, until this number starts curling up. All right, this number right here. These are all the advanced declines. So we've had, declines for the past 1, 2, 3, 4, 5 sessions in a row. And then on Friday, we had a very strong advance on low breadth participation in the equity markets. All right. Breadth was low. All right. But at the same time, and the markets went down, HYG went down, but advances over declines. Now that, if you're super bearish right now, that should make you a little bit worried, okay? Now, if we see 2 or 3 more of these in a row, that would mean that this line is curling up, okay? And generally, when this line curls up, and there's a divergence between junk bonds and the stock market, junk bonds wins. It's a way bigger market, okay? So just a caveat for those of you who are very bearish in positioning, I would be very careful, okay? You know, there's no problem in taking some profits, okay? So, you know, I listed this out on the Discord. About 92% of my money was never even invested. It was all in cash. Only 8% of my money was at risk in these long dated spreads. Even if they were to go down, I could have cashed out of them and not lose the full 8%, all right? We had our little Baidu play that gave us 2%. So really, after the Baidu play, only 6% of our money was at risk. And, you know, from that, you know, it looks like as if I doubled that amount. And so in the quarter, it looks like my spec account is up about 6%, all right? Now, in a environment where a lot of pros are down this quarter, I consider that a win. You know, I wish I had a little bit more conviction, maybe played a little bit more than just 8% or 6% of my portfolio. But hey, that's hindsight, okay? So it is what it is. And we look for our next play. The next play I do have in mind for equities, I think, okay, and this is just me, I do think that for options expiration with all the puts that we have, I think it's very likely that we might see a little bit higher, okay? We could go down. Now, again, it really depends on our liquidity data. If our liquidity data just keeps pointing towards low liquidity, if our junk bonds AD line keeps going down, if that New York high-low line, okay, this New York high-low line that we always look at, if that keeps going down, this one, if that keeps going down, let me just update just in case. Yeah, I mean, it only updates once a day, but if that keeps going down, then I think if we get up to the 4150 area, that's a good place to buy some puts. All right, very good place to buy some puts. However, if not, then, you know, if the market just keeps going down from here, if we don't see that rally, then, you know, I like to start nibbling right at the 3660 zone or so, 366 on SPY. I'm going to start buying some shares. I'll keep most of my share buying at around 345. And then if I see that MOAB signal where all the liquidity signals are starting to move up, then I'll start buying some in-the-money calls as well on SPY or the RUT or IWM. Okay, so that is that's my plan so far on this. Nothing has changed. Right now, I'm just sitting tight. Another part of my plan, HUT. It's getting closer to our buy zone, very much closer. I know we've got this big ETH event coming up soon. So if in that ETH event, you know, in the merge event, if something goes haywire, or if I don't know, if it doesn't turn out good, then I can suspect that this might go down a little bit. If that does, I'm definitely going to be buying. All right. Ford. It was under 15 earlier today, but I guess it doesn't want to stay there. 1380, still my buy zone. I will keep to that plan. PPC, I already told you guys I bought this at 2850. Looks like I bought early, per usual, and it is going a little bit down. If we get to about 29 or so, I'm going to be selling covered calls on this. All right. Oil, same thing. Oil, we had that OPEC announcement. On Monday, it was Memorial Day here, and there was very, very low volume on Monday. And I guess some of the pajama traders were able to push it up to 90 or so. Good for them. As the pros came back to their desks from all their, their Hamptons vacations, it got pushed back down. We'll see where it goes, okay? I'm done longing oil at these levels. If we see maybe mid-70s, I may consider doing a long, but right now I'm going to focus on shorting oil if it gets to this zone right here, okay? I'm going to base it more, though, on the September contract, because that's where we're seeing a lot of the open interest. When the December contract, when the December contract gets to 105, 110, I will definitely look to short this. All right, I'll be looking to short. Okay, I'll do it by via puts or so. All right. UUUU. If you're going to be in any commodity, it's going to be UUUU. I really want to get this in the sixes, mid sixes. That would be ideal. I don't know if I'm going to get this or not, though. I should have just bought it here. I know, guys. I know. Shoulda, woulda, coulda. But, you know, it was like here when we were talking about it. And I should have just gotten it here. But it is what it is. Okay. Gold. I'm still waiting for that level. If it gets to 1680 zone, 1676 to 1680 zone, I will be buying some call spreads. I'm going to get out at right here around, let's say 1800, a little bit over 1800. I'm going to get out. So it's just a little swing play for me. It's not like a long-term view for me. It's just been that in the past, few years, in the past 3 years, this has been a institutional demand zone. You just see a lot of volume with buys at this level. All I'm saying is it happens again. If it closes underneath that, I get out at a small loss. Risk to reward, very easy to manage. Very easy to manage that risk right here. All right, because if it closes below that, that means you're wrong and you just get out with a small loss. That's the type of plays I like, where the reward to risk is heavily in your favor. You're at the edge of your price structure, and you know exactly when you're wrong and you can just bounce out. Okay, so that is what I'll be looking at here. As far as that, I don't see any other changes to the plan. It was Memorial Day weekend. It was really nothing much happened on the news outside of the OPEC, the oil news where all the OPEC countries met. There's really not much. Great Britain has a new prime minister now, so I guess that. Let's see what the British pound is doing. The British pound is usually a risk-on currency. Usually you see it have strength if it's risk-on, okay? The risk-on environment. So it looks like that move is getting faded, okay? Looks like it. For all of you who trade Forex, maybe you look for it to break this level. I think if it breaks this level right here where it opened and where it closed earlier, I think that would be potentially a good scalp short. I won't be taking it, but I think that might be a good day trade for those of you who are Forex traders, okay? So that's what I see today, all right? Nothing else has changed for me. Let's look at some of our data that we always look at. One thing I noticed in the morning was that TIPTLT did gap up today. This is our inflation expectation chart. It did gap up, okay? Now, if you notice here, every time we have an outside day down, it does have a chance of retesting it, and then it gets smacked back down. Outside day down, 1, 2, 3, 4, 5, 6, 7, 8 sessions, boom, back goes down. Same thing here, 1, 2, 3, 4, 5, 6, 7, and by the 7th one, it's down again. Here, same thing. We had an outside day down. 1, 2, 3, 4, 5, 6, 7. Today's the 7th day, but it popped up. Do we see down tomorrow or not? We shall see. Okay. There is a lot of fear that that the Fed may have to get a little bit more hawkish, especially after the comments that they made after Jackson Hole. I think trying to bet on which direction and putting live money on what direction the Fed is going to go, I think that's a fool's game. So I think it may be just wise to just sit still for a bit and just wait to get clarification either from the market or from the Fed. Most likely we're going to get it from the market. All right, if history is any guide, usually the markets are way clearer than any type of Fed messaging, especially this Fed. That's my opinion, of course, but I do think that the market will give us a clear signal though before anything happens. Corn still going up. We've had record heat here in the United States. All right, I think that is affecting the corn crop. We might see revisions being made to the actual yield that the USDA projected, I think we do see some revisions in that. All right. The meat market, I mean, this is like every day I say the same thing. Oh, it's marching higher. Oh, it's marching higher. Especially feeder cattle just keeps going up. All right. That's why I'm still holding long to PPC. We have a $1 drawdown in the shares of the stock, but I do still think that because of this, in the next few quarters, their earnings are going to come out and their margins are going to be much healthier. So again, we shall see. Okay, that's a longer term hold for me. It's not something that I'm going to flip quickly. So it's going to be at least a couple of years that I hold it. Again, we'll see. Dollars on the rise. Dollars at 20-year highs. We haven't seen these levels, I think, since the 90s. Yes, we haven't seen these levels since since '02. Since '02. All right. So we haven't seen this in a while. It just keeps going up. It just keeps going up, and there's just a lot of demand from our emerging market countries right now. Lots of demand from the emerging market countries. So we talked about Sri Lanka in June. All right, Sri Lanka, remember their president had to leave the country because of all the riots. They had to pick a new president. Pakistan looks like it's having problems now with all the floods, low rice crop, also high commodity costs. They're having issues. Egypt is having issues with food costs. Tunisia, Ghana, Kenya now. So all these emerging market countries now are starting to see problems, and I think they are going dash for cash dollars. They are buying as many dollars as possible because there's a lot of emerging market bonds due mid 2023. In mid 2023, there is a lot of emerging market bonds due, and I think right now they are buying, emerging market countries are buying as much dollars as possible in anticipation of that bond payment. And so I think this may continue probably for the next few quarters, 2 or 3 quarters. I think there's going to be buying or at least demand every time there's a pullback on the dollar. All right. And that, that emerging market, that crisis that I've been talking about, I think that's going to happen around mid 2023. I think it's going to happen. We were a little bit too soon when we bought EEM, but luckily we were able to get out almost at break even because of our gains in FXI. But still, I do think that the dollar is going to keep going up, and we're going to see increased problems in emerging markets. Turkey is another country that has a problem, but they have a totally different problem. They have record high inflation, and their central bank refuses to raise interest rates. Argentina also, Latin American countries are also starting to see problems. Southeast Asian countries, Thailand, all these countries, they're having issues now. I think all countries like that, Southeast Asia, Latin American countries, now some African countries, some Middle Eastern countries like Tunisia. Well, Tunisia's in Africa, but Egypt. I think these countries are buying as many dollars as they can. We're going to see this demand keep going up. All right. CEW is that ETF that tracks emerging market currencies. As long as this is trending down and dollars trending up, I do think that we'll probably see very muted responses in the VIX. That's another reason why I wanted to get out of my UVXY call spreads. As long as the hedging demand remains low and dash for cash is high, that puts pressure on VIX ETFs or anything that tracks the VIX or VIX futures. Okay, just because instead of that cash being utilized and them hedging using puts, instead they're going dash for cash and actually selling and getting cash for it. All right, so that makes VIX a less effective trigger as a day trading trigger for SPY. Just for you day traders out there, something to keep in mind. I think if the dollar just keeps going up, the VIX just is less and less effective as a day trade signal. Just keep that in mind. Australian dollar still on its way down. Lots of news coming from China. China actually is trying to do whatever they can to prop up their economy. They're having some major issues. So not only did they do all this record stimulus and all this projected spending for all this infrastructure projects, they also allowed financial institutions to lower their foreign currency reserves, so to prop up their renminbi. And so what they're trying to do is stop capital flight right now. I think they have a capital flight issue that they're trying to anticipate and trying to nip before it gets too bad. If they do have a capital flight issue and the yuan just keeps dropping hard, their internal inflation, their domestic inflation is going to go way up, and that is going to put a lot more problems on their hands. So they're already dropping foreign currency reserves. We saw that, and I think that is also partially what's driving the dollar a little bit higher today as well too. All right. So again, keep in mind all the liquidity things we're looking at. Keep an eye on the dollar. Keep an eye on that New York high-low line, and keep an eye in our Discord for this junk bonds advanced decline line. And again, guys, our Discord, you can join it. The link is in the description box. All free, no paywalls. Okay, I think paywalls are lame, so we don't do that at Checkmate Trading. Okay. So those are the things I'm looking at. Crypto-wise, let's actually take a look here. Crypto, I actually saw no real volume over the weekend or on Labor Day weekend. I didn't see anything. Let's just take a look, though. I didn't see any big open interest changes. Oh, I don't know why Deribit's so slow today. In the morning, it was really slow too. I think a lot of people must be getting on. Call premium being bought. Okay, let's see some block trades. I didn't see any block trades that were worth mentioning. These are all very small. Yeah, 250,000, but they're all spreads. So, the net, credit or debit is actually really, really small on those. It's not until we get into the millions where it really starts, making it, when I actually consider it's, somebody who could be a little bit larger of a player. Okay, so, there was really nothing much on the options end for cryptocurrencies. I think, it's still very much September, very negative delta positioning. All right. And we still have, actually, no, we don't have, delta positioning actually now is all positive. We don't have negative delta positioning anymore. Interesting. That's what this is saying, right? Yeah, that is. There's no more negative delta positioning anymore. So now everybody is, I guess those got wiped out, and now people are positive. It's positive. So this, it could be, okay. And I'm not trying to predict the future, but it could be that, let's say the merge is successful. It could be a sell the news event. Okay, all this anticipation, people buying up calls, all of a sudden it happens. People dump those calls. It could happen. That could be within the realm of possibilities. Something to think about. Let's see what happens to the options positioning as we get closer and closer to the merge. I believe now the merge is set for September 13th. So we'll see.
Did you notice any major moves today in it? Because today was the Bellatrix pre-merge node update.
The node update? Right.
Yeah. A lot of people were buying today based on that.
I don't see anything here. What is it? These would be more recent right here. But again, these are not that big. These are for March as well too.
So that's what I thought earlier. Retail bought up on this news trying to get an edge, but it's not going to beat the total market right now.
No, it's not. Of course, retail always thinks they have an edge, but it's not, right? What else is new? So, yeah. So, as far as options positions are concerned, in big positioning, I think the big positions have already happened. The pros already did. Remember those $1 million, $10 10,000 ETH contracts. You know, remember that those contracts? Those were the big guys. They're already in and they're just waiting. We'll see what happens with the merge. I do think we might have a little bit of a sell the news if we get there, just based on positioning. It doesn't have to happen. If more players enter this market and start buying calls after that, then of course, you know, we're going to keep going up. But if everybody's already in and no one else is going to be buying calls and everybody takes profit at the same time, you know, then what, right? And we've seen that before. It happens in SPY. It happens in a lot of tech stocks. It happens in a lot of sentiment-driven stocks, a lot of meme stocks. It happens. We've already had that. Remember when I called the top of the meme stocks? Speaking of which is just tragedy. I believe their CFO jumped out of a building. You know, so that's a huge tragedy. But we call the top in the meme stocks from all that, you know, all this call buying that happened, and all of a sudden it reaches those strikes. Nobody else is willing to buy those calls, and those calls gets dumped. What do you think happens to the price, right? So it's very similar to that. A lot of call buying. If everybody's positioned in one way, and then it happens, just because it is still favorable doesn't mean it has to go up. It can actually go down. That's what we call sell the news, right? That's just what I see. It could be possible, just anticipating what could be. Just anticipating what could be. That's all. All right. So that is that in a nutshell. Today we get done in less than 30 minutes. Guys, I promise. I told you guys I was going to do the second episode of Theta Thunder. This back testing is taking me a lot longer than expected. It's just all the backtesting software that I'm using, they're all using these adjusted prices. All these, like, you know, stock charts, white charts, you know, all those charting services. When you use their data, they always use these adjusted prices. So it's not really clear what the strikes are if you look, like, you know, back in 2009, 2010, what happened. So I'm trying to backtest all this for, like, you know, decades at a time. So you guys have very accurate, you know, and bigger data sets to kind of act on. But I promise you this week, okay, no matter what, I'll do it this week. Even if I have to use those adjusted prices, I'll still do it this week. This week, I will show you guys a trade that I have never lost money on since 2017, okay? I will announce it on Discord when I do that. I'll announce it on YouTube and also on Twitch as well too, guys. I promise I'll do that this week. Episode 2 of Theta Thunder, a trade I have never lost money on, 100%. I can show you how to do it, and you know, it's a great trade. It's one of the foundations of my trading. It really is. It sets me up to succeed in all parts of my trading, including my swing trades and everything. I've went over that briefly before. I'll go over it again in the second episode, and I'll go over that 100% effective trade that I have. 100%, never lost on it since 2017, since I did it, okay? And I think I backtested it all the way right now until 2009. I think there was only one time where you have a 1 month drawdown, but after a couple of months, you're in the positive, all right? Super trade. Anyway, that's all I have for today. Any questions, comments, rude remarks? Going once, going twice. All right, guys. So then in that case, guys, again, thank you for joining me. You could be anywhere else in the world, but you decided to be here with me. I do appreciate that. Again, check out our description box. We have all our links to our Discord, our Twitch. Again, our Discord is free. No paywalls, no sub fees, none of that stuff. That's poverty stuff. We trade here for a living and for money. So we don't need sub fees and all of that. Just come join the discussion. Have a discussion with us. Come bounce some trade ideas with us. All right. So guys, I will end it there. Tomorrow we'll be back at it at noon. And hopefully tonight we'll get some more data on our junk bonds ADL line, and also some of our other options data. I think a lot of volume is coming back in after this Labor Day weekend. I do think that we're going to have some clear data, especially in options positioning, as well as our junk bonds data, liquidity data, economic data. I think there's going to be a lot of stuff to look over tonight, and tomorrow I'll report what I find. All right, guys, have a wonderful day, and I'll see you guys tomorrow.